The UK is the birthplace of modern tennis and home of Wimbledon, the most prestigious tournament in the world. Every player dreams of lifting that trophy. And before stepping onto the grass at Wimbledon, most players would warm up by playing the HSBC Championships, the most popular and longest-running grass court tennis event at the Queen's Club. Rafael Nadal was no exception until 2012, when he shocked everyone by turning down the chance to play at the Queen's Club. Not because of injury, not because of scheduling, but actually because of a UK tax rule so strict that if he played, he would owe more in taxes than the prize's money itself. In other words, showing up for 1 week would leave him with a net loss. How can that possibly happen? How can someone get paid and end up poorer? To understand this, we need to look at a special UK tax rule for athletes and entertainers, and how it dragged Andre Agassi into a courtroom battle he ultimately lost. Hello everyone, I am Momo from the Tax Universe. Today, let's look into this extraordinary UK tax rule specifically designed for global athletes. A rule so burdensome that many will intentionally skip certain events and tournaments in this lovely country just to avoid paying more in taxes than they earn. So here is the rule in simple terms. If you are a non-UK athlete and you play in the UK can tax not just your prize money, but also a portion of your global endorsement income. That part of taxing global endorsement income is already unusual, but you could still argue it makes some sense if a UK company pays a tennis player to promote its brand in the UK, since there is at least some connection between that income and the country. But what if your endorsements are paid by a non-UK company? Also, what if the money goes into a company you own in the United States? And what if none of the money ever touches the UK at all? You would probably say that since there's no connection whatsoever, the UK should have no claim on that income, right? Unfortunately, no. The UK says that if even part of the commercial value of your endorsements comes from performing in the UK, then part of that income is considered earned in the UK and can be taxed there. So if a player spends even a single week competing in the UK, the government can argue that some of that player's commercial value was created on UK soil and should be reflected by attributing a portion of their endorsement income to the UK based on time spent in the country. And because the endorsement company is outside the UK and can't be forced to withhold UK tax, the government simply requires the athlete to pay that tax themselves instead. You can imagine this rule is not exactly popular among athletes around the world, and it has been challenged before, which brings us to the Agassi case. But before we get into today's case, let's introduce our main character, Andre Agassi. Agassi was one of the biggest stars in tennis, a former world #1, a Wimbledon champion, and a global icon who earned tens of millions of dollars from sponsors like Nike and Head. With that level of fame came complex endorsement structures, including a US company that received most of his sponsorship income. Naturally, the UK government was not going to give up the chance to take a cut of that income through taxes. And Agassi argued that the UK had no right to tax any of his endorsement money because the income had no real connection to the UK in the first place, and the sponsors paying him were not UK companies, with all the payments going into his US company rather than to him personally. The UK tax authority disagreed and said that his appearances at UK tournaments increased the commercial value of his global brand, so the UK could tax the UK portion of that endorsement income. Agassi fought this in court and lost. The judges pointed out that if the rule only applied when the endorsing company was based in the UK, any athlete could avoid tax simply by signing endorsement deals with foreign companies and routing the payments through entities set up outside the UK. In reality, UK tax authorities have a long history of saying that the more complex and international your structure is, the more determined they are to make sure the rule still applies and tax the portion connected to the UK. The court also made it clear that using foreign companies does not protect you from this UK apportionment rule, which works like this in practice. If an athlete earns $10 million in endorsements for the year and 10% of their competitive days are spent in the UK, then $1 million is treated as UK-related income and taxed in the UK even if every dollar was paid by a foreign sponsor into a foreign company. Now let's revisit Nadal's Queen's Club dropout. If Nadal earns $20 million a year in endorsements, the UK could tax the portion tied to his UK appearances. So by spending one more week in the country to play Queens, that tax bill alone could easily exceed the prize money he might win there. In other words, playing the tournament could cost him more in taxes than he earned on court, making skipping it the only sensible choice. So here is what we learned. The UK doesn't just tax what you win on court. It taxes the value your global brand gains by competing there. But this creates a clear policy tension. Governments want to collect more tax, yet players want to avoid events where the tax bill outweighs the earnings. When stars skip UK tournaments, it hurts the local economy through lower ticket sales, less media coverage, and fewer visitors spending money around the event. Even though Wimbledon's prestige still draws players in, the push and pull between maximizing tax revenue and keeping top athletes in the country is very real. And as endorsement income grows worldwide, the bigger question is whether tax systems should keep stretching for every bit of global income, or rethink the balance before players start crafting their schedules to avoid the tax man instead of their opponents. So what do you think? Leave your thoughts in the comments. And thanks for watching, and if you enjoyed this episode of Tennis and Tax, don't forget to like and subscribe, and I will see you next time.